In today's video, I'm going to share with you the one crypto metric that you need to be tracking and probably aren't. Understanding this metric will help you to be early to narratives, to be early to emerging crypto ecosystems, and also to get a sense of when a narrative might be losing momentum. And that metric is stablecoin flows between different blockchains. Welcome back to Dynamo DeFi. As always, nothing I say in this video is financial advice. This is for educational purposes only. Now, let's get into it. The metric that you ought to be tracking and that I think is the most underrated on-chain metric in crypto is the stablecoin flows between different chains. And that basically just means how many stablecoins are either being bridged to a chain, being deposited, or being withdrawn from the chain. And recently I was actually able to use this to make some pretty nice gains. More on that in a minute. But to understand why this is important, you need to think in terms of liquidity, and you need to think in terms of the market being pretty PvP. And what exactly do I mean by that? Well, imagine that you are on, say, the Phantom blockchain, and you own tokens in the Phantom ecosystem, you're vibing, and there's $1 billion of stablecoins on Phantom. Well, you are competing with all the other people who are already on Phantom to make money, right? Let's assume there's no new money coming into the ecosystem. You might see a token that is doing well and you buy some hoping that it continues to do well, or you buy a token that you think is undervalued and you're hoping that other people in the ecosystem who have those $1 billion of stablecoins will purchase your tokens. But then imagine that people bridge $1 billion of stablecoins onto Phantom. Well, suddenly that's new money coming into the system. So it's no longer just PvP where you're competing with the people on the chain. You actually have new people coming in who want to buy your tokens because they're probably bridging in since they're interested in investing in that ecosystem. Basically, you look for chains where there's new money starting to come in, and that's a good sign that that chain is going to do well. So let's look at a quick example of this where you could have used this metric to make pretty good gains recently. Canto is a layer 1 blockchain that's been performing extremely well recently. But if we go back a month, so go back to January 8th, on January 8th, $26.51 million of stablecoins were bridged onto Canto. And when this happened, Canto only had around $75 million of stablecoins. So it was an increase of 1/3 in a single day. And if we look at Canto's price chart, at the time it was around 10, 11 cents. So price was much lower than it is today. And when this happened, basically nothing happened for a week or two. And then things started to move. Canto jumped up to 16 cents, cooled down for a few days. More coins started to flow in on the 24th, 25th. And then that's when Canto really started to rally up over 30 cents. And then over the past few weeks since then, basically every single day, coins have flown into Canto, and correspondingly, the price has increased. And the point of this isn't to say Canto's so great, you should invest in it right now, because this coin is up 5x in a month, which is usually not an ideal time to buy. But the point of this is that if you had been tracking stablecoin inflows, you would have gotten a heads up at a minimum that it was worth watching this chain and that something was brewing. I'm not saying that stablecoin inflows always predict that price will go 5x in a month, because this is an extreme example, but they do indicate that something is happening and that it's worth watching if you're the sort of person who does crypto research, which I hope you are if you watch this channel. Now let's look at another example that's a bit more forward-looking. Arbitrum is one of the top Ethereum layer 2s. We talk about it a lot on this channel. And over the past few days, Arbitrum has had a ton of stablecoins flowing in. $22 million went in on February 6th, and $62 million entered on February 7th. And if you look at Arbitrum ecosystem coins over the past week, a lot of them have done extremely well. Camelot, one of the largest dexes on Arbitrum, is up 168%. You've got other Arbitrum tokens like Oath, Vela up 60%. Radiant Capital, the largest money market on Arbitrum, is up 35%. And so these stablecoin inflows correspond to the ecosystem doing well, but typically with a delay. And here's an example of that with the Camelot token, for example. We saw the stablecoin inflows going on all week, really picked up a lot on the 6th. Well, look at the Camelot token. This really started to take off on the 6th, and then shot up the next day, so the 7th. And so if you look at that, you would have gotten an indicator leading by basically a whole week that stablecoins were flowing in, and then one day where there was a notable jump before you had that nice surge over here. And so that's just one more example of how these stablecoin flows can be a great indicator that more money and interest is coming to a blockchain. If you are interested in checking out this metric yourself, the best place to do so is to go to defilama.com, and then over here on the left, select stables and then chains. And so here you'll see the stablecoin market cap across every chain that DeFi Llama tracks, as well as the 7-day change across time. So for example, if we look at Ethereum, we can see that Ethereum has $81 billion of stablecoins right now, and that's down just over 1% in 1 week. And I wouldn't read too much into a 1% change unless it's sustained over a long period of time, 1% every week for a month. Likewise, Tron is up 1%. I wouldn't read too much into that. And then if you just go down the list, you can see all of these other chains that have smaller amounts of stablecoins. And one thing that jumps out looking at this here is, for example, we can see that Arbitrum stablecoins are up 12.45% this week, as we talked about. And then Optimism stablecoins, that's another Ethereum layer 2 rollup, are up 8.58% this week. And the thing with these is that the stablecoin market cap on these chains, 1.1 billion, 700 million, still a lot of money, but that is tiny compared to Ethereum, $81 billion. So actually not that much money has to flow out of Ethereum to really move the needle on these smaller chains. And this is exactly how I found that Arbitrum thing I showed you earlier. I saw that 12.45%. I clicked into Arbitrum, and then I saw that stablecoin flows are quite substantial over the past week. Alternatively, if you want a helping hand with tracking these stats, I launched a free email newsletter through Substack 2 days ago, dynamodefi.substack.com. In this newsletter each week, I'll share the 7 most interesting highlights related to crypto and digital assets from the week. Those will include things like analytics, stablecoin flows like we talked about, as well as other things like interesting readings or useful tools that I came across. That's dynamodefi.substack.com if you want to get the free newsletter. Let me know down in the comments if you want more tutorial videos like this. I'm going to aim to make 2 videos per week from now on. If you enjoyed this video, be sure to like and subscribe. And until next time, this is Dynamo DeFi.